What's up guys, Nick Sean with Mission FX here, and today you're going to learn a strategy right now that you can start using Monday through Friday whenever you're looking at charts to start making money. Now of course whenever you're starting, you should be starting out with the demo account that I've set up for you guys. It's this account right here. It's just a little demo account. This one has like a $3,000 funding. This is all play money. It's all fake money. It's just for you to get experience, okay? This is the same account that I created in the last video that I'm going to be showing you guys to test on. So right here we're looking at a chart of USD or Euro USD minute 5, okay? We're looking at Euro USD minute chart, and we're looking at on the 5-minute period, which means each of these candles on the screen represents 5 minutes worth of price data. Now one thing I told you I was going to show you how to do in the last video is how to set take profit and stop loss. So that means take profit. If price goes to your take profit area, it'll close the trade at a profit for you automatically. And if you set a stop loss, when the market goes against you to prevent losing more money, it'll stop you out at a certain level to prevent further losses. So that's where your stop loss is. So I'm going to give you a live example right here. So here we're looking at on the chart, Euro USD has been going down, 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 down for a while. Now the trading decision right here, there's no trade right here, but I'm just going to enter a trade and enter a take profit and stop loss just to show you guys how it works. So remember, this is not like a valid trading decision. This is just an example to show you how to use this feature up here at the top, which is how to enter an order. So let's just say we saw the market going down, down, down for a while. It goes down, then up, and we think it's going to go down, okay? So let's say that you want to sell the market right here. You can enter the market on a sell. And if the market goes down, then you'll profit. If it goes up against you, you'll lose the trade, you'll get stopped out. So let's say we're going to enter the trade right here. Stop loss is going to go up in here somewhere. Let's just make it like right in here in this area. And take profit is going to go somewhere down here. So we'll put it somewhere in this area. So let's set we're going to enter the trade right here. We're going to set our take profit at 1.23, this area down here. And we'll set our stop loss at 1.233, okay? How about that? So let's go right here. We're going to set our take profit at 1.23, and we're going to set our stop loss at 1.233. Okay, so let's change the lot size to keep things simple. Let's do 0.1. This means we'll get $1 per pip. So we've set our lot size at the top of the screen. On the left side, on the red, I put 1.233. That's where the market, if it goes up against us, then we're going to get stopped out at that area and lose money. And I've also set the take profit on the right side in the green, which is 1.23. If the market goes down to that area, we'll make money. And so I've got all this set up. Now I'm just going to click sell, sell. Now the order is open. So right here, it'll show, this is the center button right here. If you look down at the bottom, you see it's this center button right here, the upward slanted arrow, the open trades. So now it shows our Euro USD trade. It shows the balance in our account, closed balance, and then it shows our equity right below that, which is the floating profit and loss. If we're up in profit on an open trade, it'll show how much money we're up on the open trade. And then it shows all your margin levels. Don't worry too much about margin. All you need to know is that you shouldn't be using big lot sizes on a small account. If you have $1,000, use a 0.1, 0.2, 0.3. If you have 3,000, max I would use is maybe one standard lot, meaning $10 per pip. But for right now, just for example, we used a 0.1. So right here, if you just tap that, I just tapped it, right? You just tap it. So if you tap it, it'll bring it down a little drop down window. It'll bring a drop down window. On the left side, you'll see the stop loss and take profit orders. Also on the lower right hand side, you'll see the commission, which is the amount of money your broker takes from you for entering the trade. Like when they place the trade in the market for you, they take a little bit of a commission for their trade fee for like executing the trade for you. So so that's it right here. This is the open trade. So now we're just going to go look at the chart and see what it looks like. So as you can see, right here is where we entered, right? And we said we're going to put our stop loss up here and take profit down here. So it shows you on the chart sell right here, right? This is where we enter. This is our entry. So we sold right there. We put our stop loss up here. It'll show that that is the stop loss. See how it says SL right there? It shows that our stop loss is up here. If the market comes here, we'll lose money. It'll close the trade for us manually, or I'm sorry, automatically. And then down here is take profit. So if the market comes down here and drops into our take profit, we'll make money. So that's that right there. Let's look at another example. This trade, I don't know where it's going to go. It doesn't matter. Like I said, we're just using this for an example to show you guys how it works. But let's look at GBP USD. So let's say we want to buy. For some reason we think the market's going to reverse. Let's just say we want to buy. We're going to buy here, set a stop loss just below, and set a take profit just above. Okay, so we're at 1.3813. Let's set our take profit up here at 1.3823 and our stop loss at 1.3803. Okay, let's do that. So take profit, we're over here. Over here it's already set up to be 0.1. See? So we're good right there. Stop loss will be 1.3803 and our take profit will be 1.3823. Okay, so we're gonna click buy, and then it shows our open order right there. So if I click on this order, we can see everything. If I just swipe from the right side of this order to the left side like this, it'll take you to the chart. So we can see the chart, we can see here's where we bought, here's our take profit, and here's our stop loss. So all that's good. So now that you've learned to place trades, we're going to go into a little bit about the strategy you're going to be using. So this strategy is called divergence, okay? And what divergence is divergence is a pattern on the chart that when you look at this pattern, you can use it to predict a reversal in the market. So let's say, for instance, the market goes up and down, right? The chart is just squiggly lines, right? Market goes up and then down and up and down and up and down and up and down. If you can predict when the market will go up, you can use that to your advantage, because you can buy right here and then you can take your profit somewhere up here and you can make money just off of a movement if you can predict it. Now, of course, if you buy here and the market goes down against you, you're also going to lose money. So that's why you need to know and have very good trading rules to make sure that you'll be able to accurately predict the market movements most of the time. So I'm going to show you how this pattern works and how you can use it in your trading right now. And for the rest of the week, you can start scrolling through the chart history like I am and practicing and finding the patterns. And then you can start trading it live during the week. So let's use this for example. Looking at the chart on the minute 5, you can start on any time frame you want, any currency pair, any time of the day. You just have to find this pattern. So you started right here in the minute 5. First thing we're going to take into account is that the market has been dropping for some time, right? That's what we want to see first. The market's either been going up for a while, or in this case, it's been dropping downwards for a while before we want to buy. If we're going to click sell, we need to make sure the market's been going up for a while, and then we click sell after we see a pattern. So right here, let's look at this for example. Market's been going down, 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 and then it came down here and started doing something. So here's what we look for in divergence. Divergence, in and of its own definition, divergence simply means to move apart. So here's what we're looking at whenever we're saying move apart. We're saying the market's been coming and it's making a low here and then a high, a low, high, low, high, low, high, low, and then it comes down here and makes a low, right? It's just an area where the market came and then it reversed. So whenever the market comes and makes a low, what we're going to do is we're going to make sure that we link this up on our RSI and we can see, okay, this is the low on the RSI. See, this is equal to this. It's just represented in terms of the strength. So the market has made a low right here. And then what the market's going to do is it's going to go up for a little bit, and then it's going to make a lower low. It's going to make another low, but it's going to be lower than this first one. And then what you're going to do is after you see a low and then a lower low, you're going to look on your RSI and you're going to see, okay, here's my low right here. Here's the first one. And then the market came in this lower low, and then this one on our RSI is actually higher than this one. So if we connect lines showing this, I'm going to do a trend line right here. These are our lows on our main chart. See how they're sort of slanted downward right there? So that's our main chart. We have the first low and the second low. What I'm going to do here is I'm going to link the same lows but on our RSI window to see what they're doing. So if we connect these lows in the RSI window, they look something like this. So you see that? So the market, like I said, recapping, market had been going down for a while, right? And then it came down here and made a low. This low was near the 25 level, and that's typically a good thing to see if you want to see that first. Just make sure the market makes a low in the RSI near the 25 level. Market popped up, came back lower, but at the same time, when the market popped up, it came back this little peak, this little low right here. It didn't go lower than this. This was actually, in fact, higher than the first low, while on the main chart, this was lower than the first low. So this is lower, this is higher than that one. So these, if you connect them, are going down. These, if you connect them, are going up. This is it. That's what divergence is. So divergence is a reversal pattern that states whenever the main chart data diverges from the RSI's indicator data, then the market may make a reversal. So as you can see right here, as soon as this low happened, the market shot up. The idea is you want to buy the market when it makes the low that's divergent, and then after you buy it, stop loss goes just below it, take profit goes just above it, the market will typically go and spike up, hit your take profit, and you'll make money. Okay, so let's go look at a few examples. Let's look at another example in the case of a buy. Okay, actually here, let's look. This is a good one. So the market, number one, market had been moving upwards for a while, right? We're going up here, had a little sell-off, and then we had a quick run up right here. So the market went up here, and it made a high right here, right? It came up and it made a high. This is a little peak. It looks like a mountain. The market went to this area and then came back, right? Leaving this high. So if we look down at our RSI window, we'll see it was this high right here, okay? So we have that right there. Market came down, but on the main chart, it had another peak that went higher. So I'm going to connect these two peaks, okay? I'm going to connect them with a trend line. So here's me connecting them. Looks something like that, right? You can see here's a high, came down, higher, right? So in our RSI window, we had this high right here, right? This is the same thing. Market came down, went higher right here, but if we look at this peak right here, this peak failed to go higher than this first one. Looks to be about the same right here. Typically, you want to see it a little bit lower, you know, so you could say these are going downward while the main chart's going upwards. But this is still divergent because these peaks, these two little highs right here, are diverging from what the main chart is doing. The main chart's making a higher high up here, right? It's a high, but it's higher than this first one. But the RSI is not going higher. The RSI is going maybe not necessarily lower right here, but it's failing to go higher, indicating that it is diverging from the main chart. And so if we draw a little trend line connecting this right here, something like that, yeah, something like that. So we can see that the two peaks are diverging from each other. Okay, so the idea in this case is to click sell up here whenever the market is making a higher high, but RSI is failing to make a higher high. So you click sell, stop loss just above, take profit just below. As you can see, the market quickly went right into profit. You would have made money, and you would have been out of the trade. So cool. So let's scroll through here and find something else. This happens all day, but remember, first you have to wait for the market to have been going down for a while and make a low near or at the 25 level. So this low came below the 25. Let's zoom in on this real quick. Market made this low right here, right? It's equivalent to this low. So it made this low right here, popped up for a bit, came back and made a lower low. So that's cool. So now we have a long move down and then a peak. And the market came up and then made another low. So market moved down, made a low. A low and a peak are the same thing. It just made a low, came up and came down. So I'm going to draw a trend line connecting these two right here. And you have that right there, okay? It doesn't have to be perfect. It just, you know, shows that you're connecting two lows. And while on the main chart right here, we have this. Make sure I can draw this. Hold on. All right, guys, there it is. So let's just make sure we're connecting these right. Came down, made a low. If we look straight down, it's this low right here. Good. We've connected these two. Market went up, came lower, came past the first peak right here. So we connected these two. And then if we look straight down, this low right here is higher than this low, while the same low on the chart is lower than this low. So this is lower than that one. This is higher than that one, okay? So the idea in this area would be buy the market right here, click buy right here. As soon as it goes lower, when it's divergent from the first peak, click buy, stop loss goes just below the market. Look, it goes up straight into profit. Stress-free, you don't have any negative, you're not risking a lot of money. You're just waiting for the pattern and you're just trading it. So that was a good one. Let's look at another case of a sell. This stuff happens all day, guys. It's crazy how much it works out as long as you're just waiting for the market to make a big move and then make a divergence and then you're just getting in and out. So let's look at something very solid here. This is a pretty good one. Yeah, this is a decent one. So again, we're going to scroll out first. We're just going to make sure the market's been going up for a while. So the market has been going up for a long time. Market has to pull back eventually. We just have to pinpoint the exact area it's going to pull back. So the market pulled back, went up, up and up and up, and then it got to right here, right? So we see the market made a first peak right here, right? Let's connect that on our RSI. Okay, so it's right here. It's at the 75 level, so that's good. So that's our first little high right there. Market comes down, makes a higher high. So let's draw a little trend line connecting those. Boom, right there, trend line. Okay, so you have a trend line right there. Now let's connect these on our RSI window. This is the first high, so that means we're going to start the trend line right there on our RSI window. And this is the second high right here, so that means we're going to end the trend line right here on this peak. So it's this peak and this peak, okay? Now what we're going to do is we're going to draw a trend line, connecting those. And right here is what our trend line is going to look like. So as we can see on the main chart, we had a high. Market came down, made a higher high, while on our RSI window, we came up, made a high, and then market came down, and then it failed to make a higher high. The market made a lower high than this one. This is still a high, but it's just lower than the first one, while on the main chart, this is higher than the first one, okay? So these ones are going up in the main chart, but these top peaks are going downwards in the RSI window. The idea would be to sell right here, put a stop loss just above, take profit just below. You would have been out of this trade in a few candles, maybe like 20 minutes, in profit, directly into profit. I'm sure some of you guys saw this right here. This trade right here, right? Wouldn't this still qualify too? Market's been moving up for a while, made a high, and it was right here on the RSI window as well. So if we see this high right here on the RSI window, this is the main chart, this is the RSI. This is a higher high in the main chart, but it's lower on our RSI window. So let's connect the peaks. Let's just see how this one plays out. So market goes up, right? Something like that. RSI window, let's connect the peaks in the RSI window. It's going to be these two peaks right here. Okay. So those. So we had the market go up, make that higher high. The idea would be to sell right here, stop loss just above, take profit just below. And look, the market went straight into profit. You would have been out here in a few candles, boom, with profit. Then the market went up and then did it again. Made a high right here. Came down, made a higher high, and then boom, lower on the RSI. You would have entered right there, comes just below. So that's how you trade divergence, guys. It's a very, very simple strategy. And this is something you can use this week. You can start going through the market, start fine-tuning your skills. Divergence literally happens all the time. All you have to do is just be patient for it. You have to wait for the market to be headed up or down for a while. After it heads up or down for a while, find two peaks, right? Either two lows or two highs. And then connect those peaks and make sure that they're divergent. Make sure that whenever you're looking at the main chart, this goes up here, first peak, comes down, goes higher. While on the RSI, this is the first peak right here, comes down, RSI goes lower. These are going down. These are going up. Pretty simple. I mean, that's it. So you sell the market right there. Look, instantly into profit. Very small risk. If it goes up against you, stops you out, it'll take you one trade to make back the money you lost. And yeah, and the market does its thing. So guys, yeah, this is what I want you to do this week. I want you to just like look for the patterns like this. Watch this video a couple times over if you need to, as far as the strategy part. And just learn this little pattern, okay? And so this is all for free. You don't have to pay anything for anything like that. If you want to become a student of mine, work with me personally, see me live trade in the group every morning, call out the trades that I'm taking so you can jump in them as well to make money too, then yeah, we have Mission FX Students Group. If you want advanced training, you want personal one-on-one mentorship, then come on board, start. You'll make money, you'll be fine. Of course, there's no promises in this industry. Nothing can be guaranteed, but I will tell you this. If you are good at being coachable and you can listen to directions, then there's no reason you shouldn't have my same results and the results of all the students in the clients group who are making money every single day, posting their screenshots in the group that they're in profits. I get my phone blown up every morning because everyone's always sending me screenshots of their profits. So, like I said, as long as you can follow directions, you should be fine. But focus on this first. Get profitable with this. Get a little bit of consistency, and then if you want more advanced training, then of course you can hop on board for the clients group and come and trade with us. And it's a ton of fun. It's a really fun lifestyle to be able to trade from your phone every morning, and then get up and do whatever you want the rest of the day. So guys, Nick Sean Mission FX here. I hope this helps you out. Great. I'm so happy you've been able to go into this free training and you've watched these few videos. So go check out the ones below. There's just like different patterns and stuff and different ideas to help you with trading and different things to look out for. And I will see you guys in the next few videos. So thanks for watching. I'll see you guys soon. Happy trading. Bye.